Good afternoon, good morning. Welcome to Develop Your Edge with Anthony Crudele. I'm your co-host, Tom Schneider, CMT with NinjaTrader. And before we get into it, I do want to remind everybody that futures and options trading contains substantial risk. Not for every trader, you could potentially lose all or even more than all of your initial investment. That's why we recommend you use risk capital. What is risk capital? It's money you can afford to lose, doesn't keep you up at night, doesn't extend your retirement horizon. Also want to remind everybody that past performance is not necessarily indicative of future results. So what we talk about here on this program contains neither trade recommendations nor financial advice. It should be used solely for educational purposes. With that out of the way, it's my pleasure to welcome back Anthony Crudele. How you doing, Anthony?
How you doing, Tom?
Yeah, doing well, doing well. Getting through this really mild winter. Um, Happy to be here. Interesting day today. You talk about it in the past. It's not always what happens on Fed Day. It's the digestion of that information. We're seeing it today.
Yeah, and I find that today is a very difficult trading day. And I'm glad for any of you that are tuning in live during a very busy session, but it's actually a session where I'm going to be doing very, very little today. And I know we're going to talk about the RSI, and that'll definitely play into why I'm not doing really much at all today. And I know that today we're going to take a deep dive into the RSI. But yeah, I mean, just getting back to, these Fed days, the Fed now it's what everyone's saying on the macro side is that the Fed is not, they don't believe the Fed. Let's put it that way, right? And so the markets are just saying that they're not going to continue to raise, or they think there's cuts in the future. There's all these different things. I'm not a macro expert, never claimed to be one, but when you get a tape that's like this, people are so hungry for stocks to go up that it's one of those things where things start to break out. Technically, you start to get this macro backdrop, which we've talked about in the past, and people just start chasing this stuff. I mean, it's great for the portfolio, but it's not the easiest for day traders because we kind of get up here in limbo, right? I think that we're in these areas where when we're breaking out, it's hard to just do this and be long, it's just not the easiest. And today we're going to talk about the RSI, and the RSI really is a great tool to understand environment. And so we're going to talk a lot about that today.
Yeah, and one thing you mentioned, Anthony, don't fight the Fed is the mantra we've heard so many times. And it looks like right now, at least today, it looks like we might be fighting that Fed, and the market is actually advancing in lieu of that.
Yeah, I mean, that's what makes it so difficult. I mean, I'm not someone who is going to sit back and go and dissect exactly what the Fed did, because that's just not what I do, right? I have to move forward. I have to go, what is the reaction of the market? And it's just one of those things where there's just so many people now that are in there doing things for so many different reasons. You can kind of take the technicals on the really short term and just put them to the wayside until this starts to digest. And I think we get back to a really good technical trade. As I know most people out there, obviously tuning in on NinjaTrader and on my channel, not really macro based decisions for our trading. A lot of us are trading based off of the technicals. And so therefore, when you get into these areas, you feel compelled to do something because it's busy or we're breaking out, but it's very difficult to manage risk. And it's very difficult to just identify how far a market could go, when they're going to stop. They stop on a dime and rotate back. And so I try to sit back and like I said, today with the RSI, I've got some good notes. I think it's going to be a good conversation for everybody.
Awesome, great. And in my experience, RSI, number two technical study from all the types of users that I would consult with, moving averages being number one. Number two, not by a long shot, is RSI. So I'm interested to hear about how you interpret it and how you apply it to your trading.
And you just said it, how I interpret it and how I apply it. Any indicator that I go over on this show is not going to be the traditional way. You go in, look up in the book and say, how do you use an RSI? How do you use a order flow VWAP? How do you use a Bollinger Band? I've actually had conversations with John Bollinger on Twitter where I commented on Bollinger Bands, and he looks at them completely differently. He created them, right? So who would know better than him on how to use them? But at the end of the day, I do use them differently. Indicators, I don't think there's going to be a ton of new indicators coming out in the future. I think there's always going to be people that are building new indicators, but so many of them are going to be redundant of what we already have. What it comes down to is interpretation. How do you use them? And the RSI is the relative strength index. And what's interesting about the RSI, and to me, and why I think it's so popular, is because the definition and its name tells you a lot about market environment, right? Relative strength index. How strong or weak is a market? How is the market trading now in this uptrend versus in a prior uptrend or in a prior downtrend? It is a great tool to identify the power of a move. And so if you think about that, it's telling you that when we're overbought or oversold, for those of you that don't know, it's 70 or higher is overbought. Maybe we pull up the chart early today so people can see it. I just got a daily chart up here of the S&P. 70 or higher is overbought, 30 or lower is oversold. This is just a daily chart of the E-mini S&P. And what most people are going to look at, myself included, but there's a way that I look at it, is when we're overbought, when we're oversold. Majority of time in the middle, no one really pays much attention to it, right? But there's something there. And also when we get overbought or oversold, initially people think, oh, that's an indication to be short, right? Because, oh, we're overbought. Well, think about that for a second. If we're getting to overbought, that means that the market really is in a powerful trend. So if you look at a relative strength index, it's showing you that the market is really strong, right? And so the mindset that a lot of traders have is to go against that. And which in reality, you're always going to be early and the reason why most people are probably going to lose money initially trading the RSI is because they're going to step in front of it early. We're overbought. I can't wait to get short. Most likely it's because they missed the large move higher and all of a sudden they're in a hurry to make that quick tick on the way back down. And that to me is the biggest mistake with the RSI. That's why I look at it as a confirmation. I look at it as an environment test, and I look at it as a non-indication of something to do. So it's an indicator, but it's not indicating to me to do anything. It's indicating to me environment. And that's extremely important.
And I always refer to it as a state-based indicator. What is our state? You're right. It's not always a trigger. It is telling us something about this market, whether it's overbought or oversold, that might fill in some of the blanks with our other indicators or complement them. We talk about bias on the show. It could help you with your bias.
Exactly. And the one thing that I think is important when you look at any sort of indicator, and we look at the charts today, I have Bollinger Bands, order flow anchored VWAPs to the first days of the month, and I have an RSI. These indicators are not redundant, right? Relative strength index, a Bollinger Band, and an order flow VWAP do different things. And when you're looking at a relative strength index or anything else that's really testing the strength of the market, the momentum of the market, you have to look at that and then you start to interpret it in ways that it is a confirmation to your strategy. So what do I mean by that? You don't want to have multiple indicators that are very similar in indications that are giving you a similar indication to an RSI. You want to have that be your one, and you want to master really looking at how your market reacts to that signal, right? And so what I want to do is to start off today is just talk a little bit about how I use it. And let's go back to, I'm going to go back to really March. We're going back almost exactly a year. And I like to use the RSI starting off on a daily chart because it really gets me in the mindset of like, where are we? How powerful is this move? Environment again. I'm going to keep drilling that home because that's what I use it for. And I like to use the Bollinger Bands with it because the Bollinger Bands are showing you when we're expanding volatility or we're contracting in volatility, right? So think about that, everybody. You know, you have a Bollinger Band that's telling you when volatility is expanding, right? Moves got strength, we're going, and the Bollinger Bands are going open and open and open. And then all of a sudden the market starts to contract because not every move can expand forever, right? Unless it's Tesla. And then you get to, and then you look at, the order flow VWAP, and that's another different tool that's just telling me where are we relative to the order flow VWAP, right? Are we above or below it? And I've talked about that a ton, right? If we're above an order flow VWAP with the mouth of the Bollinger Band going higher, that has always indicated to me that what? We're very bullish, and that range could keep expanding, right? It could keep going in that direction. So then you go and you pull up your RSI. And your RSI, to me, in this type of a scenario where you're looking at the Bollinger Bands and the order flow VWAP, it really will help you identify when that move is slowly starting to run out of gas. That goes back to like, we're now getting to that overbought plus 70 type scenario. So let's go back and look at some examples. Here we are back at the beginning. If you go all the way to the left of the chart, if the chart starts, as you see here, we're above the order flow VWAP, and we start to go higher, and the market is going up with the mouth of the Bollinger Band opening. Okay. You look at your RSI, it's going, right? It doesn't quite get to overbought, which in some ways tells you that the market really just couldn't get that strong of a move. Then you start to get weak and it comes all the way back down. And the reason why I even point this out, because even though it never got to overbought, it just showed you that really the market itself nobody was really very interested on the rallies. So that tells you something. That's information, right? When markets get overbought, it means that there's a frenzy of buying coming in, right? There's a lot of people stepping in. Shorts are getting squeezed. There's a lot happening. That didn't happen here. So when the shorts regained it, it told me, look, they couldn't even get overbought. Quickly, we get to nearly oversold. So not every indicator is going to be an indication, but it is telling you something. It's telling you that nobody was even that interested when we were rallying here. So that's one thing. So it gives you the context and the environment. So when we start to get weak, I look at it and say, man, we can get to oversold really quick, because that's where the interest is. The interest is when we're getting oversold or overbought. That's why tops and bottoms are made that way with RSI, because the interest starts to get really active. So this, in some ways, by not triggering an overbought, is triggering to you that we could easily become oversold. So that's the first thing I want everyone to understand, is like, it's not just about looking for overbought and oversold. It's about understanding the context of the situation.
Right. And this momentum is not carrying you to that overbought situation. Tells you the momentum's weak, the market's weak, even though it's in an uptrend. It's not going to sustain, turns around, and it's got a greater chance of going closer or even being oversold.
Exactly. And so when traders are sitting there, they're always waiting for like this one look, right, in terms of what an indicator will give them. Well, we're overbought. And the whole time in the middle there, they're not paying attention to an indicator that's actually giving you information. I think that the one thing that a lot of new retail traders, intermediate traders go through is this: they wait for those signals, because everybody keeps saying to them, follow the process, wait for these setups, right? But throughout the time that you're waiting, are you getting an education on these indicators? That's why I say master these indicators. And so that scenario, when I go back and look at it, you say to yourself, that's very interesting. They could not get overbought, and all of a sudden they quickly got oversold, right? Now let's look at some oversold scenarios, right? And this is a line chart, so it's not going to always be perfectly clean, because it show you that it did get and violate the 30. But back in here is really a good example of when a bottom is being formed in a market with the RSI. What I like about this scenario right here, this is why I like layering Bollinger Bands with it. If you go back to June, if you look at the chart between June and July, on the chart right here. So you have a market that was grinding lower, really consistently stayed near the bottom of the RSI and stayed consistently almost oversold near the lows, right? Bounces, but never truly got oversold. And look at that Bollinger Band, really choppy. So anytime a Bollinger Band is choppy and just kind of going sideways, it tells you what? Volatility isn't expanding. The market really hasn't capitulated, right? And that's what Bollinger Bands help me with. They say, look, we've expanded so far and now we're contracting. Now maybe we've had some sort of capitulation for a mean reversion. But you didn't get that there. But you did get it in the middle of June. And in the middle of June, what you saw was market starts to sell off, takes out these previous lows, gets oversold on the RSI. Bollinger Bands open like a mouth, right? Starts to come back in, and it starts to contract towards the end of June, beginning of July. Then you start to see the RSI start to work back up, and then we regain getting back above the order flow VWAP, and that's where the rally comes. And you can see we actually had a really strong move going into that time, one of the strongest move we had over the entire year. And the RSI really told us at this point, alongside with the Bollinger Bands, that look, it got very active here. It got oversold, made lower lows. Bollinger Bands were smooth. They come back in. It starts to sustain trade above the order flow VWAP. And now you have this grind up type scenario. This helps us as day traders and swing traders. Once again, the context of the environment. It got oversold down there. It regained some important areas. Bollinger Bands contracted, indicating we're not expanding volatility. We're contracting. Look for mean reversion. And that's exactly what happened. And so that's why the RSI is just a great confirmation for environment.
One thing you just described in that downward trend that culminated in June, middle of June, and then we saw the recovery. That to me is something that I've referred to as divergence, right? So when you see the market trending down and making these swing lows, but the RSI just can't get oversold, that to me, that third time in June is a real big indication that, man, we can't get oversold even though we're making new lows on the price. Something's not aligned, and we see that reversal in the price, and then of course RSI reflects that as well.
Exactly. That's well put, Tom. And and this is why I like the RSI as an additional tool to your indicators. Because if you just were looking at the RSI, you were long here, you were long in May, middle of May, you just kept buying it and thinking that the bottom was in. But until the Bollinger Bands really got a smooth look and you saw that regaining of the order flow VWAP, then you had a scenario where you are a little late to the party, but now you understand the environment's changed. Everybody's in a big hurry. But that's why I said really initially, I said most people that are trade the RSI are going to be in short too quick or in long too quick on an oversold or overbought move, period. Because they're only looking at the indication the RSI is giving them. They're not looking at it in the context of the entire marketplace. And that's where the mistake comes. Now I want to go back to October, and then I want to get to current day and talk about what I'm seeing now. You look at October, this is exactly what you want to see, right? Bollinger Bands opening again, right? The bottom Bollinger is going straight down with the market. Then you have a market that gets oversold. This is a really good divergence look here that you don't see too often, where you have the Bollinger Bands going lower, then they come back in. They're starting to contract. The market makes a lower low. The market cannot get oversold there, and it snaps right back up, regains order flow VWAP, and then starts to grind higher. So this October, actually end of September area, was very key, because once that low was made in October and we got back into that range, and you saw that's the divergence I love, is that lower low with the Bollinger Band coming in just like that. And you're like, wow, the RSI couldn't get oversold and the Bollinger Band didn't expand. It actually contracted during that time. So that was a blip. And that's where you have somewhat of a capitulation type low, right? And then you bring us to current day. And what's interesting about right now, as we're sitting near the highs, what's happening, right? We came off of this October low, which is really, that's how long the momentum is carried, if you really think about it. Some things that I like to look at, and I'm actually going to draw we're going to go into a little bit of some Bollinger Band type discussion here with this, because I think it's important, because it actually plays alongside with what happened with the RSI. And so when you look at this, what's interesting is in this move back in here in October, it's end of September, October, the peak of this Bollinger Band high and the peak of this Bollinger Band low showed you the power of contraction and expansion in this move, right? These are 20 period, 3 standard deviation Bollinger Bands. Okay, I like that. I don't use the 20 period, 2 standard deviation. So it's a 3 standard deviation Bollinger Band, right? And we have now remained inside there. We are really just retracing, if you really look what's happening, the power move back from this overbought area right here, which is pretty interesting, right? You look at the peak of this Bollinger Band here, which comes into this high just above 4,300, and you look at this power move lower. So you had an overbought scenario here to an oversold scenario here, and we are right in the belly of that, right? We are right in the middle of that move, maybe more towards the top part of it. Definitely more towards the top part of it. So it gives you the context of right now where you say, look at this market is still unwinding these shorts. The only true resistance I see, and I don't play a ton of support and resistance, is back up above 4,300, because that's where the top of this move came. That's where we got overbought. That's where the longs got trapped. That's where the Bollinger Band started to come back down. And RSI, to me, probably doesn't start to get overbought until we see that capitulation type move to the upside here, where eventually what I think, if you're looking for when we contract and rotate back down again, as you know, I've been long the entire year. I actually got flat as of yesterday. Little did I know we'd be up another, 50 today? What are you going to do? But ultimately, when this Bollinger Band maybe starts to go over and starts to turn back around, that's when you potentially have another rotation, and you look for something to happen very similar to this. So you have end of June or middle of June all the way into the middle of August. You have that move, right? Using Bollinger Bands and order flow VWAP to guide you. Then we rotate back down. Then we have an oversold scenario again. And then we rotate back up, and we're just in this cycle of the move. And so this is why the RSI is such a great tool, because it shows you where we really are, right? We're not oversold. We're not overbought yet. We're still in the move from where that last overbought to oversold scenario happened. So this puppy can keep going, at least for now. And then you use the Bollinger Bands and order flow VWAP to guide you.
I think that's a great explanation. And, using those Bollinger Bands as a range guide is really clever. I really like that. Standard two standard deviations is standard. This is 3 standard deviation, gives you a little bit more room, but it seems to be pretty spot on with how it tracks those ranges, especially when you look back at August as being those highs. It's not, that there's something to that level, 4,300, that you mentioned could be resistance.
Yeah. And the reason why I like the 3 standard deviations, people always ask me this. Remember, a lot of these indicators, when a lot of these indicators were created, the pricing of these markets was much lower and the volatility was much less, right? I mean, I remember being a scalper where it was like you tried to make $2 in a move in the S&P, and that was like a big move as a scalper. I was mostly trying to make 50 cents to 75 cents, maybe $1. And if you caught a $2 scalp, you're like, wow, you killed it. You can't even put an order in nowadays without it being $2 against you or your way almost the minute you get in. So the fact that we have this kind of volatility, because percentage now is so much bigger of a move. So 1% move now is, what is it? 41 points, right?
Right.
So you think about that. So back in those days, when a lot of these indicators were created, you go back a decade or more ago, a lot of these indicators, a 1% move in the S&P was $10, right? Or $5.
Right.
And now it's $40. So it's 8 times. So I like to expand the volatility. I like to expand the deviations to be able to allow myself to adapt to this current environment. Right now, if you're trading treasuries, or if you're trading a market that doesn't move very much, then maybe you pull back to a 2 standard deviation. Like, I don't even think it's bad to use a 4 standard deviation in NASDAQ. I mean, let's face it.
Especially today, right?
He's an animal.
For sure. So you're right. That's a very good point. One, you pointed out that these indicators, Wells Wilder, I mean, it's almost 50 years old, right? 45 years old indicator. Bollinger Band's probably around the same amount of time. And
don't let John hear you say that.
Well, I mean, okay, so to be fair, it might be a little less than that, but the point is, there were different markets. We had different ways of analyzing the market. We had different, volumes, different volumes of market. And frankly, the market's traded a little bit different. So plus we have all these tools now that we can analyze these markets real quick, where it took probably weeks to months to analyze a huge set of data by hand or by hand calculator. So when you're optimizing these studies on, let's say, different markets that might even not exist now, right? Because the markets change. Certainly, they're going to have different settings. They're going to have different interpretations, and I think it's really smart that you're bringing it to the current and now, what you observe now, rather than some textbook from 45 years ago.
Exactly. As we close out today's show, I mean, I want to talk about really just a quick recap of the RSI. It's a great confirmation for your trading systems traders. It's not something I use as an indication. You might find a way for you to use it as an indication. Everything I talk about here is personal to me and how I use it. I just think that when you're using an indicator, you don't need to go by the book, right? You can interpret it in different ways. I talked about it today, overbought in bull markets. It doesn't necessarily mean that I'm immediately going to get short. It's just showing me the strength of the rally, and I watch how it reacts. I use Bollinger Bands and order flow VWAP to guide me and help me get short against a primary trend. Right. And the same thing can go for a bear market. And then you watch the cycles of when we go from overbought to oversold. Look at time duration in between there. Look at what the market did in between there. So just because an RSI doesn't get to overbought or oversold, it's still giving you some information of the current environment. And it can be a great confirmation to anything that you use. And I know we have an Ask DYE question. And one thing I want to do real quick while we get up that before we get that Ask DYE question is I want to go over CME Group's event contracts. If we could pull up that screen real quick, because I think that this trading environment right now is extremely difficult. I think yesterday, today, tough. I mean, I'll be the first to tell you yesterday was not a great day for me. And today, this morning wasn't the easiest as well. And like I said, I'm going to keep it very light. CME Group has daily options on these markets. So if you like to be bullish or bearish, any one of these markets, you can pick a direction and you could trade a daily option, and they have it for S&P, NASDAQ, Dow, Russell, all these different markets, and they're not leveraged, and they're really a great tool to use. You can go to cmegroup.com to learn more, or I do something every single day at placeyourtrades.com that talks about these products. So I just wanted to mention that they're a good product tool for when the markets are busy and you want to sit back and you still want to have some skin in the game. You could have small skin in the game using these event contracts.
Right. And, Place Your Trades. Love that website.
Thanks,
Love
man.
that
Yeah,
website.
we got a lot going on there. I know none of us made any picks today because we said they're all long shots because today is just too difficult to determine.
Right.
This market is just wild.
It is. It is. So we have a question of the week. We do. You can send in your questions through Twitter. Just make sure you use the hashtag AskDYE, AskDYE, and be sure you include @NinjaTrader in that tweet. And this week's question is from Vance, Twitter handle @VancePlaysPiano. He asks, where would you start with respect to order flow VWAP on Bitcoin futures? So would you start that at the start of day or the start of the New York session? So start of day being the start of trading the night before 6 p.m., or would you use the start of the New York session? I would assume 9:30 a.m. Using the stock market as a guide.
Personally, for Bitcoin, I would use the overnight because I would want to gather that information throughout the night. And it's very similar to what I would want to do in gold and what I want to do in euro. I would utilize those probably more from the overnight sessions than from the regular trading hours, just because there's multiple time zones trading those markets around the clock. So I'd like to get more information when it comes to US stocks and even oil. I like to look at more of what's happening from the open and oil because you have WTI and Brent, right? But when you have gold, euro, Bitcoin, Ethereum, those I like more around the clock just to gather more information. And you will probably find that they're almost going to be very similar, right? So they're not going to deviate too much. But that's a great question. And I think for any product that you use, I think you have to look at what the volume is and just what is the different access points to those markets. Some markets are using really 3 sessions to trade. Like the night session to me in the NASDAQ and the S&P, I think are just not as important. Maybe if we have an election night, I would want to do it from there. Or if there was something very important, an announcement, then I would trigger it from there because I don't want to see what happened from that point. But aside from that, most of the time, I like to see it when all the stocks are participating. That's a great question.
Thanks for that, Anthony. And thanks, Vance, for sending that in. Just make sure you're following us at NinjaTrader on Twitter so we can make sure we get you the proper swag. And by the way, it's this idea of sending a little thank you. It's open to people in the United States. You must be following us on Twitter at NinjaTrader. But thanks for that, Anthony. Where can people reach you?
Just go to Anthony Crudele on Twitter. It's pretty much where everything flows through there. You can go to anthonycrudele.com and, of course, placeyourtrades.com. I've got a ton of podcasters there, blogs, all sorts of different stuff, live shows every day. So I hope you guys will come there and learn really more about daily options.
Yeah, you could lose some time there going down the rabbit hole. But I want to thank everybody for coming, and we will be back here next Thursday, 10:30 a.m. With our next session. Thanks again, Anthony. And I want to say to you all, thanks for coming. We'll be back with bars closing in the afternoon. Until then, have a great trading day.
Thanks, Tom. See you, everybody.